Welcome back to Alpha Recap, your end-of-day market digest from stockalpha.ai. Energetic day in the markets, but we wrapped with a cautious tone. As always, if you have questions about anything we cover, you can reach us at stockalpha.ai and ask directly. Jessica, great to have you back.
Thanks for having me. Lots to unpack from the close, Tyler.
Let's start with the headlines. How did the major index ETFs finish?
The market closed in a pretty cautious posture. The broad S&P ETF finished down about 0.1%, essentially flat. The tech-heavy NASDAQ ETF slid about 0.4%, and small-cap exposure fell about 0.5%. So the day felt like selective rotation rather than a broad, risk-off move.
So what really stands out here is why some parts of the market held up while others lagged.
Exactly. There were a few clear narratives pushing flows. AI-related capital spending and supply chain news helped certain hardware and industrial names. At the same time, a big utilities M&A headline pulled defensive, yield-seeking money in. And then you had some corporate guidance misses and restructuring headlines that added dispersion. So yeah, rotation, not rout.
Give me the AI and supply chain angle in plain English. What happened there?
Dell announced it was expanding an AI-oriented factory with NVIDIA involved. In simple terms, that's a signal that companies are still investing in the physical gear needed for AI: servers, chips, integration. Analysts note these projects suggest multi-year CapEx demand. But the gains were concentrated. A handful of suppliers benefited rather than a broad technology rally.
Right, so concentrated winners. Not every tech name running higher.
Correct. And that explains why the NASDAQ underperformed the S&P. Big AI suppliers saw interest, but broader growth names faced profit-taking and caution.
Now the utility story. A deal sparked buying there?
Yes. Headlines about a possible NextEra and Dominion-related deal drove a utilities rally. M&A and regulated utilities can change the math. Analysts often point to expected cost synergies, steadier cash flows, and potential re-rating. That attracted yield-seeking investors and pushed utilities to lead the day.
So some money rotated into defensives because of M&A. Interesting.
Right. And the other thing is that utilities often act like a safety valve when investors worry about near-term policy or earnings uncertainty.
There was also mixed corporate news, correct?
Yep. A few headline examples. Honeywell chatter around a potential spin-off lifted sentiment on the idea that breaking a conglomerate into parts can unlock value. At the same time, Avantor lowered its guidance and pulled the stock down, which reminded people supply chains and inventory cycles still matter. And Meta announced it was cutting 8,000 jobs while doubling down on AI. That created a split reaction among investors.
Hold on, say that again about Meta?
Meta announced an 8,000 job reduction as it pushed heavier into AI investments. So you had cost-cutting on one hand and heavier near-term investment on the other. And the market took that as mixed news.
Okay. Small caps lagged more than the rest. Why's that?
Small caps are typically more sensitive to interest rate expectations and domestic growth. With the Federal Reserve's path still uncertain, investors tended to favor larger, cash-rich names over smaller, rate-sensitive companies. History shows small caps lag when policy is neutral to restrictive, and that pattern showed up today.
Short reaction. Not surprising.
Yeah, that tracks.
Let's shift into sector rotation. Who were the winners and losers?
Utilities were the clearest leaders because of the M&A headlines. Industrials and manufacturing showed momentum tied to AI-related CapEx, and a few company-specific beats, like solid first-quarter results from a big agricultural and construction equipment company. Materials and mining had pockets of strength from demand signals related to electrification and infrastructure. Communications and media were mixed, largely because Meta's news was a two-sided story. Energy had theme-driven moves. Carbon capture, EV infrastructure, and pipeline narratives got attention. Cannabis stocks rallied on regulatory momentum. Crypto-related names were volatile as crypto markets sent mixed signals.
Big picture. Thematic flows, not uniform sector strength.
Exactly. The day rewarded specific stories: CapEx-linked suppliers, utilities on deal chatter, materials tied to electrification. But broad sector rallies were limited.
Give me a quick run of the notable individual stock stories.
Sure. Dell expanding an AI factory with NVIDIA involvement was one. Meta's 8,000 job cut while increasing AI spending was another. Honeywell spin-off talk lifted hope for structural value creation. Avantor missed guidance and the stock fell. CNH Industrial posted stronger than expected results, which helped some industrial names. There were also smaller niche winners, specialized electronics and defense suppliers on contract wins, and some large-cap consumers and tech names that benefited indirectly from AI momentum.
Honestly, I was a bit surprised by the CNH pop.
That was a solid execution story. Analysts rewarded the operational beat.
We should talk about the economic backdrop and the Fed. Any major prints today?
There wasn't a single surprise macro print to dominate the tape. The story remains the interaction of moderating inflation and a resilient labor market. Market participants are still price-sensitive to Fed communications. Officials keep saying policy will be data-dependent, so the timing of any rate cuts is still up for debate. Absent a clear downward trend in inflation, market action tends to stay range-bound with selective rotation.
So the Fed is the background music again.
Yes, yields and growth expectations were oscillating, which favors large, steady franchises when uncertainty rises.
Quick technical read. Was this more consolidation than breakdown for tech?
From a technical standpoint, the Nasdaq's pullback looked like short-term consolidation after a strong AI-led run. Momentum indicators suggested a breather rather than a decisive breakdown, but confirmation would need a follow-through day on the downside. Small caps showed the usual caution we've seen when policy expectations are mixed, and the S&P staying near unchanged reflected narrow leadership, keeping the index afloat while breadth compressed.
What should traders and investors be watching next?
Several things. First, earnings and guidance, especially from companies tied to AI, industrial capex, and consumer demand. Forward guidance will tell us about capex pacing and margin pressure. Second, any hotter-than-expected inflation prints or strong employment data could keep markets cautious about rate cuts. Third, watch sector flows and deal chatter. M&A or spin-off news can create short-term leadership. Finally, position shifts in big-cap tech versus defensive or thematic names will be telling. Volume and breadth will show whether rotation is broadening or staying narrow.
Short reaction. Got it. Lots to track.
And to add to that, analysts note this environment tends to reward selective stock and sector selection rather than broad market bets. So company-level execution stories will matter a lot.
Final quick takeaways for listeners who want the bottom line.
Okay. 1. The market closed cautiously. The S&P was essentially flat, the Nasdaq down a few tenths, and small caps down about 0.5%. 2. Action was driven by concentrated thematic flows. AI CapEx helped select hardware and industrial names. Utilities rallied on M&A, and cannabis saw regulatory-driven interest. 3. Corporate headlines created dispersion. Some companies announced cost cuts with heavy AI spending. Others missed guidance. 4. The Fed and economic data remain the key backdrop. Until we get clearer disinflation signals, expect selective rotation and compressed breadth. Analysts emphasize that active stock selection will likely outperform blanket strategies in this setup.
Great. Thanks, Jessica. Before we sign off, quick reminder for listeners. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks all. This was for informational purposes only. Analysts' observations and market sentiment described here are educational and not investment advice. See you next time.